Okay, good morning, everybody. Happy Monday. It is February 7th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Like we do every Monday, we're basically going to go back, we'll go all the way up to the high time frames and just kind of see what the charts are telling us here coming into this new week. Obviously, it's been quite a struggle for the bulls here for the last few weeks. And it's not too surprising that we're actually finding a little bit of a correction here. Like I said, the last few weeks here, it's normal for the market to have a nice out breath, right? A nice push in the market, and then they need to go ahead and take a deep breath in to go ahead and continue to push. And right now, it looks like that's probably what's happening here. We're taking a nice deep breath. We'll get some strength as we pull back for that potential push. So let's look at our yearly chart here. So here's all of last year. Here's 50% of the previous year, 42.08 quarter. As you guys know, we came down right to 42.1275, just in front of that. And now it seems like we're recovering, but just kind of interesting to note that we basically retraced 50% of last year's price action, and it's only been what just about a month, maybe 2 months. So we'll see what what happens here as we go into the end of February and into March. But when I come down to my 3 month chart, each candle here again representing 3 months of price action, essentially a quarterly chart, although it's not oriented so that it's set up which each candle is exactly January to March and all that, or December to March, and then March to March to June. But it's a 3 month chart, so each candle is equal to 3 months of price action. And you can see that we did push higher right up to our all-time high at 48.08 quarter, but the RVI did significantly come lower. So we have a little bit of hiccup in the market here from the quarterly perspective, and so that's something we want to keep in mind. Also, take a look. 50% of the current candle that we're in right now is essentially right around 45.12 here, and we're still just a little bit below 50% of this entire candle. And then the previous quarterly candle, we're also sitting right around that number at 44.93. In fact, currently we're at 4,500, so just a few points above the 50% of that previous candle. So these are just some areas in the market we're watching. Being above that 50% is a good thing for the bulls. Being below is a bad thing for the bulls. It's just a very general way of looking at the candlesticks here. So we'll see if we can continue to stay above 93 here and maybe come back up to close at highs. And then we'll come back and take a look at this. But so far, quarterly chart showing that sign of potential exhaustion in this nice strong push ever since that COVID correction back in March of 2020. So let's go up to the monthly now. We are just getting into this new month, so this new candle we can't really say too much about, but going back to the previous monthly candle here, nice bearish divergence off the highs again. Just like we were talking about a few weeks ago, this pattern of pushing to higher highs with each new candle, but then the RVI continually pushing to lower highs. So that previous candle, which closed just a few days ago, also showing that bearish divergence. And as you can see, this really beautiful correction we got right all the way down to that 42.12. So currently, we're just kind of sitting right in the middle of the previous monthly price action, and we're still below 50% of the previous month. So again, we're right around that dividing line, and we'll have to see who comes into power. It very well could be that we just sit here and basically chop sideways for a while. In fact, there are some analysts talking about basically chopping between 42.12 and what was the number? 42.12 and 4800 here for a few months. So we'll see what ends up happening. Nobody knows. Nobody knows what's going to happen next. For all we know, we just pull back and that's it. The market is just going to continue to rip. Again, despite all of the crappy stuff going on in the world and in the U.S. economy right now. So let's take a look here at the weekly. We talked about the weekly being the first time frame that showed some bullish signs. So if we go back to our monthly, we go back to our quarterly or our 3 month, we've got basically a whole bunch of bearish signs. The weekly is the first time frame that we get to where we have our first bullish clue. And well, I mean, we looked at this. Remember, at the beginning of last week, we said there was potential from that candle to get that push. And we said we would really need to get through that 45.70 to 45.80 area in the chart. And sure enough, we came up right up to the top end of 45.80, and we are having trouble now. So there's still on this weekly chart some pretty good bullish clues here with not a lot of bearishness off of the highs we made from last week. So I do think that there's potential we could continue to push here from the weekly perspective. Just keep in mind that we are in the beginnings of an overall downtrend here. And so the idea is if the bulls are going to be strong this week, we're going to want to see this weekly candle get above the previous weekly high, just as starters to have a little bit more faith in what could be a potential bullish reversal here. Again, getting some pretty good bullish signals when we get to these shorter time frame charts. Now, weekly, still a pretty high time frame, but it's the first time frame, like I said, we start getting potential bullish clues here. So we'll see what happens. This previous weekly bar, somewhat bearish looking, a huge peak up, again, right into that expected resistance area, and then closed down around 50% of the range. So it doesn't look super strong, but like I said, we still have a pretty good bullish clue right now on this chart. I don't like the look of that candle, but the good thing is if we can get above that wick right there, that is, in many people's trading systems, a buy right there to get long once we can get through that area of the chart. So there's our weekly. Again, it's a little ambivalent here, stuck right at 50% of the previous week with a huge wick like that. So your guess is as good as mine. I don't know. Are they going to come trek up here and break through, or are they just going to continue to sell off here? Most people are arguing that that high we made at that 45.80 area is it. We're now going to continue to trek lower and push to a lower low. But nobody knows. Nobody really knows. It doesn't even matter if everyone knows that the world is going to topple down tomorrow. It seems like the bulls just continue to rip it. So I don't think that the logic really matters as far as economic indicators go. In fact, for the last 2 years, we basically, most of the time have been, should have been a bearish market. I think most would agree. So let's take a look at our daily chart now, starting to get a little bit closer to the time frames we want to pay attention to this morning. And I didn't have this trend line up, but I saw a few other people throw it up, and I thought it was just a beautiful kind of confluence with the level that we expected to hold. So had I have actually looked at the trend line, which I do from time to time, it's not something I don't normally, focus on trend lines, but I'll throw them up there once in a while. Had I have had it on there, like I said, it was basically lining up with our shaded region. If you zoom all the way in, I don't know if you guys can see it on your screen, but that was our shaded region there from 70 to 80, essentially. And I just like that trend line actually came right to the same area. Would have given me even more confidence to potentially short that area of the chart. Now, remember last week we said we had a nice bearish divergence off of that high. And as we came into the new week, I believe, where were we? February 2nd was the beginning of last week. As we came into that week, let me see here. Let me orient myself. So this is Monday, Friday, Thursday, Wednesday, Tuesday, Monday of last week. Okay, so on Wednesday of last week, we said we noticed that there's potential bearish divergence on the daily. So that was our first bearish clue after this attempt for the bulls to break out. And then if we went down to our 4-hour chart, we also had the bearish divergence up there as well. So nice bearish clues from a divergence perspective. And again, being right at the expected area of resistance with that major swing low, the 61.8. Again, looking at the trend line across the highs, coming down right into that area as well. And here we are, right? We started pulling back, and then I believe on Thursday, we were here with each other. I believe that was Thursday there. No, it was Friday. So on Thursday, we came in and we said pulling back right to the 38% retracement here would be a test of the previous weekly high of 44.46 quarter. And that was essentially, and if I don't know if you can see there, we shaded this region right here and said this would be a really good support area if the market is going to continue to pull back into the previous weekly price action. That would make sense there as a good support. Might not hold for the long term, but would be a pretty safe area for a bet for some type of bounce, even if it's just for a few points. And sure enough, look at that wick, that daily wick, right into the shaded region there, right off the previous weekly high. Look, this is not, I'm not saying that I am some type of mystic or that I have some crazy knowledge here. It's very simple. It's a 38% retracement. It's the previous weekly high. We got this major wick sticking up right there. And so everything lined up for that to be a potential support, right? So there's no secrets here. It's all pretty straightforward stuff. We're just looking at basic market analysis stuff. So really good support off there. And you can see on this daily candle, somewhat, in my opinion, even though we closed about 50% of the candle and below where we opened, really nice wick to the downside and a close up above 50% of the range of that candle. So again, your guess is as good as mine here. I don't really have a bullish divergence off that low, which tells me we're probably going to come back down and test it, if not come down to some deeper levels, and then get some type of daily bullish divergence for the major turn to come back up and then test some of the levels we have above us. But again, anything's possible. You don't need a daily bullish divergence for there to be a pretty good turn, but we typically see it, right? So down here, I didn't think there was the most beautiful local bullish divergence, even though you could extrapolate back to the lows all the way back here, and you could say there's divergence. Nothing really great in that local area, and we did get a 300, 400 point bounce. But typically you're going to see a nice daily bearish signal, and then the market follows through with one of the major kind of rotations. Just like we saw a few days ago, really nice clear bearish divergence, major rotation back down to retrace the leg. So this morning, like I said, no divergence right now, but potential they could hold because that's our first expected area of support. And we have a nice, in my opinion, almost looks like a potential reversal candle there from Friday's price action. So this morning, going to be important to stay above that low we made from Friday at 44.3850 there. But again, pulling back to a deeper retracement level is not bearish. I mean, we could come down into one of these two levels. I mean, it would be bearish for the next day or two to jump in on that move. But overall, we're not out of the weeds. We could bounce down around 4,400. We could come down to that 43.58 to 55 area and find support and bounce out. So we'll have to see. So from the daily perspective this morning, still have a clear bearish divergence from the highs. And then on the pullback here, a really nice area to find support. So either side is basically kind of a demarcation here. You know, getting below there opens up all the stuff down here. Getting above here obviously is going to open us up for some of those areas that we talked about. So let's go down and take a look at them. So on our 4-hour chart, I have kind of the zones all laid out here, right? We have the two down here where we chopped around for an entire week. We have the two up here that we basically held the bottom one here, pulled back, pushed right up to the top end of this one here, pulled back right into, and look at how beautiful all this stuff lines up. The two boxes both close right here. Again, previous resistance, 38% retracement, everything lined up right there. Same thing basically at the top end. Expected resistance, 61.8. Previous major swing low. Top of the box comes right in and fails, right? So beautiful stuff from that perspective. And from the 4-hour, we actually do have a pretty nice bullish divergence from that pullback into that 38% retracement level from the previous weekly price action. So, and a beautiful looking bullish bar. Nice doji right down into the level and then a close up at the high. So, and we have not come down to break it. There have been some attempts to break out here, and we're still stuck in some sideways action. Still stuck within Friday's price action, right? So it's going to be important this morning to get outside of that high from Friday. Let me go back here. High from Friday at 43.50, 45.32, and then getting below that low of Friday at that 44.38.50 level. Let me see if the 4-hour has anything else to kind of add. One thing that's interesting to note here, if the market does bounce at some point, again, doesn't have to hold the first expected support area, it can come down lower. If it bounces either from where we are now or from a deeper level and we can get through the highs of last week, that opens us up right into the 27% extension of the whole leg that we've been looking at here. And we see this happen all the time. We see the market pull back into the 38 or the 50 or the 61, get a nice bounce within a few ticks or a few points of it, push up and come right into the 27, the 61, and the 100% extensions. So again, I like the fact that the extension itself lines up right with the bottom end of our next chop block up here, our area of structure. So that is a good target to the upside. If I was long, I wouldn't be waiting for a touch of that level. I'd probably be looking to get out just in front of this area of what I would argue is some supply here, where the market just pretty strongly sold off, tried pushing up into the level and failing multiple times. So that would be where I'd take profit, but ultimately the target would be right up into 46.75 here, and a little bit beyond it maybe. And then that brings us all the way up into this 47.40 area, which would be the next expected area of resistance, just about in between that 27 and the 61. And then obviously the 61.8 extension is basically the all-time highs up here. So I do like that all these ratios are kind of working out. And one last thing I want to leave you with from this higher time frame perspective, and then we'll start getting into some levels for this morning. So just looking at this current structure here in the market, I noticed that the 61.8 retrace is lining up almost perfectly with this area of major resistance back from whatever it was, January 27th going into the 28th there. Major resistance, huge pullback from there, and then a bounce to get through. I do think, and that's also just about 50% of that previous weekly range, barring that little peak below to 42.12, barring that little area. This is essentially our range from that week before. And that area is basically 50% of it. So I like that everything's lining up there. I like the fact that our chop block, the top end of that smaller chop block there, is also sitting right here around 43.50, 43.60 area. And then finally, I threw up this trend line, and I think I even had it on, no, I guess I have it here and on the 60. This trend line is also sitting right here at the top end of that chop block. So if we do end up pulling back deeper, somewhere in this region, it would have to happen basically within the next maybe day. Pulling back right around that 43.60 area, 43.55, would be a zone that I think would make sense to see a pullback into and some type of reaction. Again, no guarantee it's going to be a 50, 100 point bounce from there. But that's an area I will be watching. So let's go down now to our intraday timeframes and see what levels we want to pay attention to coming into the open here. So we've got my eye levels on here, and again, I do like to toot my horn that basically every level on here is based on price action from 6 months ago. And as we came down, 42.13 was our expected support level. Well, I said 42.12 back a few weeks ago, maybe a month ago, whatever it was. As the market was selling off from all-time highs, that 42.12 was an expected area of support. So first of all, we bounced right in front of it at 42.1275, and then as we started to trek higher here, we pulled back and held the eye levels within a tick or two, within a point or two. Pulling back, bouncing right off of it, coming up, bouncing right off 24.50. coming back right to 43.98, pushing, pulling back to 74.50, and then coming up and holding 45.27. And then ever since there, we tried to bounce, and then they've been pulling back and then selling off the back end of the eye levels. So we came up actually right to 78.75 here and got a really nice pullback. And then they came up, they peaked above. This is that famous, or this is one of the setups we like, a nice peak above the previous high with bearish divergence and then a failure. So a nice peak above, right above our eye level, and then the failure right into the next eye level for the potential bounce that never happened. And then again, off the back end of the eye levels, we're now failing and pulling back. And then remember, there's that 44, 45, 50 eye level matching the 38 retrace in the previous weekly high. And that's essentially where we bounced. And then we came down, we peaked below just by a few points, came up, held 45.50 and attempted to break out. And now notice where we're holding, right around 45.27 again. The high of last week was 5 points above that. And then the pullback here in the bounce right off 74.50. So we're playing around within all these levels on the chart. Again, they were based on structures in the market from all the way back 6 months ago back here. So working out beautifully here. And so this morning, where are we? We just held the 44, 45, 50. We came up. We couldn't get through 27. And so we pulled back and we held 74. So now the question is, in this little tight chop block that we're in right now, where are we headed? And I really don't have anything telling me. There's not a huge confluence of things lining up here. So it's basically going to be, let's see who wins out here. Are the bulls going to win out, hold 74, hold 96, hold 27, and get through that previous high from Friday to go up into 78 and then maybe 46.05? Or are the bears going to jump in at some point in here and go ahead and swat this down and come into some of these deeper levels here to watch? So just keep in mind, this morning we have the smaller fib, and I told you last week, and this is kind of interesting, we have the smaller fib right here, and I don't know if I brought this up last week, but we came down and held the 38 retracement of that smaller fib perfectly. Came right into it, attempted to bounce out, but again, the bears are really strong right now, and they swatted it back, came down, and we basically then came down to the 38% retracement of the whole leg. So if we get rid of the small leg here, right, the area where we bounced all the way up to the high we made, if we get rid of that leg and we look at the major low from the week before last all the way up to the high, the 38% retracement, again, this is that 38 retracement we were talking about on the higher time frames here. Let me go back. Pulling back right there to that previous weekly high, right? So that's the 38 we bounced from, but I just think it's interesting to note that the first leg I told you we had to get through was right here, and they held the 38 to the tick, right? So these fib legs are all over the place. We have minor legs, we have the major leg, but they all seem to respect the levels almost perfectly. And then if we look at the retracement down in this current leg, look at where we're finding trouble, again, right at the 61.8 retrace. So the 61.8 was 45.29.50. The high there was 45.32.50. So just kind of peaked above the 61.8 and failed from there. Now look what we're looking at to the downside here. If the bears end up gaining strength and they sell off here and they get through the previous daily low, the 27 extension is our eye level at 98. The 61.8 is bringing us right to that area I told you to pay attention to coming into this week. Somewhere around 43.55 to maybe 60 here is going to be an interesting area. So there's that, and we're getting really close to the open here, so I'm going to have to get really quick. I want to jump down into our 10-minute chart and just look in the most immediate area here with every single level on here, what we're looking at. And so in the most immediate region here, our two 50% levels are basically right around 89 to 85. So it's a potential support area, but we're also potentially bouncing right now off 44.96.75 with a bullish divergence. So this could potentially follow through to come back up, just keep in mind we have 4509 and CP 4511 as potential resistance. If they can get through there, it's more than likely going to come up into this 4522 to 24 area. And if the bulls are strong, they'll continue to rip higher for those higher levels we talked about. On the opposite side, if they get through the 250% levels we look at and our KP, it's back down to test 74. And from there, be aware we've got this area around 4460. And then we're right back into 4550 in the swing low from Friday. If that breaks, we talked about the levels we have below us down here. And I've got to jump down to our member section because the market is basically opening. So we're going to have to start looking for some trades coming out of the open. So have a great week, guys. We'll be back here Thursday for another pre-market. And if you're interested in joining us in the trade room, just send me a message and we'll try to get you set up and you'll join us. So until Thursday, have a great week and hope to see you guys then.